Welcome to Ulosca channel. Access all WGU practice questions. Principles of Financial and Managerial Accounting D196 practice questions with answers.
Question 1. Which of the following is an asset? A. Accounts payable. B. Service revenue. C. Equipment. D. Salaries expense. Which one is the correct answer? The correct answer is C. Equipment. Explanation. Assets are resources a company owns or controls that have future economic benefits. Equipment is a tangible asset used in business operations, while accounts payable is a liability, service revenue is income, and salaries expense is an expense. Question 2. The accounting equation is A. Assets equals liabilities plus equity. B. Assets equals liabilities minus equity. C. Assets plus liabilities equals equity. D. Assets equals equity minus liabilities. Which one is the correct answer? The correct answer is A. Assets equals liabilities plus equity. Explanation. The accounting equation is the foundation of double-entry accounting. It shows that a company's resources are financed by creditors and owners. This relationship ensures the balance sheet stays balanced. Question 3. Which financial statement reports revenues and expenses? A. Balance sheet. B. Statement of cash flows. C. Income statement. D. Statement of retained earnings. Which one is the correct answer? The correct answer is C. Income statement. Explanation. The income statement measures a company's financial performance over a period, showing revenues, expenses, and net income or loss. The balance sheet shows financial position, while the cash flow statement details cash movement, and retained earnings shows equity changes. Question 4. Depreciation is A. A decrease in market value of assets. B. Allocation of an asset's cost over its useful life. C. A method of asset disposal. D. A type of liability. Which one is the correct answer? The correct answer is B. Allocation of an asset's cost over its useful life. Explanation. Depreciation is a systematic way of spreading the cost of a long-term asset over its useful life, matching expenses with the revenues generated from the asset. It is not the same as market value decline or disposal of assets. Question 5. In managerial accounting, cost behavior refers to A. How costs react to changes in production volume. B. How costs are recorded in the ledger. C. How costs are allocated between departments. D. How costs are classified in tax returns. Which one is the correct answer? The correct answer is A. How costs react to changes in production volume. Explanation. Cost behavior explains how costs change in relation to changes in business activity levels. This is crucial for budgeting, forecasting, and decision-making, as managers must understand fixed, variable, and mixed costs. Question 6. Which inventory costing method results in the highest net income during periods of rising prices? A. FIFO. B. LIFO. C. Weighted average. D. Specific identification. Which one is the correct answer? The correct answer is A. FIFO. Explanation. FIFO assumes older inventory is sold first, meaning lower cost items are recorded as cost of goods sold in inflationary periods, resulting in higher net income compared to LIFO or weighted average. Question 7. In a manufacturing company, direct materials are A. Materials that can be directly traced to the product. B. Materials used for administrative purposes. C. Indirect costs. D. Finished goods ready for sale. Which one is the correct answer? The correct answer is A. Materials that can be directly traced to the product. Explanation. Direct materials are raw materials that become part of the finished product and can be easily traced to it. They differ from indirect materials used in production, but not directly part of the product, and from administrative materials. Question 8. The break-even point is where A. Total revenue equals total fixed costs. B. Total revenue equals total costs. C. Total revenue exceeds variable costs. D. Variable costs equal fixed costs. Which one is the correct answer? The correct answer is B. Total revenue equals total costs. Explanation. The break-even point is when total revenue equals the sum of fixed and variable costs, meaning there is no profit or loss. Understanding this helps businesses plan sales targets to cover all costs. Question 9. A budget is best described as A. A forecast of future transactions. B. A formal plan of future operations. C. A statement of actual results. D. A tax planning document. Which one is the correct answer? The correct answer is B. A formal plan of future operations. Explanation. A budget is a detailed, formal financial plan outlining expected revenues, expenses, and resources over a future period, guiding decision-making and performance evaluation. It is proactive, unlike statements of actual results. Question 10. Which principle requires accountants to record assets at their purchase price? A. Matching principle. B. Cost principle. C. Revenue recognition principle. D. Conservatism principle. Which one is the correct answer? The correct answer is B. Cost principle. Explanation. The cost principle requires recording assets at their historical purchase price, not current market value. This ensures consistency and reliability in financial reporting, even if market values fluctuate over time.
Thank you for watching. For more practice exam questions, subscribe to our website at www.ulosca.com.